Hi, everyone. I'm Chrisanda with Live Sotheby's International Realty. Joining me on the comfy couch today is my friend Heidi, and we are going to be talking about all things mortgage. And because she's a professional lender, it's not me pretending that I know what I'm talking about on nights and weekends like I sometimes do, but we're going to be getting it straight from the professional's mouth. And I have a whole series of questions that are questions that I get asked all the time, and also just things that I think people need to know because you don't know to ask the question to find out the answer. So, Heidi, please.
Yeah, my name is Heidi Gravert, and I'm the owner of Abundant Mortgage Lending. And I'm a mortgage broker. What that basically means is I don't work for any one particular bank, but I shop lots of different banks for all kinds of options to find you, the customer, the best deal and best fit for your home purchase.
Perfect. Okay. So, everyone should know that Heidi and I are both huge proponents of home ownership, and not just because it's what we do for a living, but because we truly believe in what home ownership brings to people's lives and the importance of it. And we both work very hard to help get the best scenarios on both with the home and then the mortgage product because it is a team effort. No money, no house, technically. It's the most important part at the end of the day. But we also want you to be happy and we don't want you to be house poor. So, okay. One of the things that people need to be aware of. So you can go, there's so many online resources, right? You can go to a big bank. I'm not going to throw anybody under the bus yet, but you can go to a big bank, you can apply online, and it'll spit you out a pre-approval. Why is that not necessarily the best thing for someone to do?
That's a really great question. Yeah, the problem is that you don't have a human being involved. And so there may be some details about your situation, frankly, that the algorithm, the program, if you will, is just not going to pick up. And some of that nuance can be extremely important as to whether or not you're actually able to close or not. Or maybe you need to go in a different direction or massage in a different way.
Yeah. Heidi and I can both speak to situations that almost didn't happen. So you almost got to closing. There was a snafu because all the in-depth work wasn't done up front.
Yeah.
That could expose situations. Do you want to talk a little bit about that experience?
You and I had a client, 2, 3 years ago. He was a veteran and he went online and it spit out this pre-approval and he thought he was ready to go. But there was a pretty major detail
Pretty major.
for that loan. And so anyway, the program, just didn't pick up that nuance. Had he proceeded forward with that generated online thing, it would have been very problematic for him.
Yes. Sometimes as well, and I can speak to this as a realtor, that there are clients that come to me and they've already found their lender. That's not always a great situation. When it is a big bank situation, you don't always have a number to call on nights and weekends. You don't always have somebody that you can talk to, and they parcel out the process so much that it's hard to get to the person that you need to talk to understand or to get an answer to your question. One of the reasons that I love working with Heidi is because she's local. She lives in Colorado Springs. Like, she's everywhere. She doesn't want to have bad things said about her when she's standing in line at the grocery store. Like, oh, you're the one that I didn't get to buy my house because you dropped the ball. Also, she's available nights and weekends. And sometimes you just have a question or you just need to check something. I never like to write an offer until I've checked with the lender so that the client knows what their payment is going to look like if they buy this specific house with this specific taxes, this specific HOA, because all of those numbers change.
100%. Yeah, it is a completely different experience to call the 1-800 number online where you've got a call center in Michigan and, somebody local like me. It is a wildly different experience. One is like making an order on Amazon versus going down to the local downtown shoe store. That is the distinct difference between how you're obtaining your loan. So, but yeah, absolutely go with your realtor's recommendation because they've very often done many loans with that loan officer. They have a confidence in the communication and that the deal is going to get done and that T's will be crossed and I's will be dotted. And as a community member, just to, Chris's point, if I do run into clients at the grocery store, so it is meaningful to me that I do a good job for people versus the 1-800 number in Michigan, just in Detroit. If they don't do well for you, they'll skin off their back, I guess.
Then they just move on. Yeah. All right. So there are so many different scenarios, just like each individual home shopping experience is different and unique to that person. What if I am not a W-2'd employee? Can I still buy a house?
Yeah, absolutely. Tons of programs that are out there. If you're self-employed, if you're a commission type employee, either 1099 or W-2'd. Yeah, so lots of options out there for people.
What if I work in, say, the restaurant industry, and with the laws that came out where tips are not taxable income, how do those get factored in to showing my income when I go buy a house?
Yeah, tip income is one of the more unique types of income, a little bit pseudo what we call self-employed. We are looking basically for a trend of 2 years or longer. Some months are going to have better months than other months. And so we're basically looking for a 24-month trend where we obtain that information for tip income. It could be from your employer through a verification of employment. It could be tax returns. It could be pay stubs. It's probably a combination of all of those things. What's neat about non-taxed income is we can also gross that income up. So that helps with your qualification as well.
Yeah, which is great. There's a whole generation of buyers or would-be buyers that are saddled with a lot of student loan debt.
That is something that we see on the regular. I just would like to say, first off, student loan debt is no longer in forbearance. I've got a client that I'm working with right now. He did not realize that he had payment starting. He has sadly been in default for a long time. So number one, check to make sure. Yeah. Hey, do I actually have a monthly payment for that student loan debt? So there's things that we can do. Income-based repayment plans. Many times I'm directing borrowers to get themselves into that so that we can lower that minimum monthly payment for that student loan debt. If you are in default on student loan debt, that is going to exclude you from certain loan programs. So it is definitely, serious business.
Absolutely. Let's talk about that. Default on student loans. If you file bankruptcy, had a foreclosure, how does that impact your ability to buy a house in the future?
We call those mortgage events. There is going to be a seasoning based off of those events. So depending on what the event, it could be 24 months since that last event. It could be 48 months, depending on the program and what we're trying to do. There are some outlying loan programs that do allow you to move forward fresh out of that event. Again, talk to your local lender to find out what your options are.
Absolutely. One of the things that I want to stress as we're talking through this is that for most scenarios, there is an option and there is a way to get on a plan. Say I come to you, Heidi, and I want to get qualified to buy my first home. I'm 19, 20. I don't have a lot of job history. I don't have high income. Like, should I just stay renting? Or is there an opportunity, and how would we know this?
Yeah, that's a great question. Yeah, we have young people buy homes, on the regular. I'd say the sooner you can buy a house, the sooner you can get it paid off. We're looking at FICO score. We're looking at debt to income ratio. You'll need some money to get into a house. It's my job to basically look at all of that for you and let you know, hey, yes, you're in a position to buy. And if not, we can put you into a plan and let you know, hey, these are the markers you need to hit, the goals, if you will. And I've had people do that as well. We can do some reverse engineering. Hey, I kind of need you to be at this income. Can you go back to your boss and ask for a raise? Is it maybe, hey, is there another job opportunity you could take making a little bit more money? It could be, all sorts of things. Hey, I need you to go on an income-based repayment plan for your student loans, all sorts of stuff.
So let's talk about down payment assistance because a lot of first-time home buyers feel like, oh my gosh, I have to have this, that, and the other thing, and I don't have a lot of cash. So there's no way I can buy a house. Let's talk about not only is that not true, that there are programs and they are possible, but there's no free ride in this world. So let's talk about the pitfalls. That it's not a pitfall. It's just something that you have to know going into it, that you're not getting a blank check from somebody and you just never have to pay it back unless it's gifted from a parent or grandparent or aunt and uncle, whatever. Yeah.
So, in addition to wanting the magic wand and the crystal ball,
Yeah.
I think also, being that the money fairy would be nice to have too. I want a money fairy. Thankfully, a lot of our main programs have, fairly low down payment requirements. Conventional is only 3%. FHA is only 3.5%. But if that still is, too much to handle, yes, there are some assistance programs.
So let's do math super quick.
Yeah.
So 3% on a $300,000 house,
Yes, $9,000.
$9,000. And you can incrementally go up.
Yeah.
Average first time buyers purchase price is somewhere between 280 and I think like 400.
I'd say that's true.
You can figure that you need, $10,000-$12,000.
Yeah.
Give or take a couple of pennies to get yourself into a house.
So there are more and more programs coming out every day for first-time home buyers. So there are options. But to your point, Chris, that old saying, you don't get something for nothing. These companies, they are not the benevolent money fairies. And so while there is assistance, almost always there is a higher rate that's, included with that. So this is part of the discussion that I have with, first-time home buyers is, all right, well, maybe you do need, $9,000 for that down payment. Is that something that mom and dad or maybe grandma or an uncle or a cousin, somebody that can maybe want to gift you for a graduation gift or, a wedding gift or whatever. Those are acceptable forms of down payment, and it'll help keep your overall payment lower because you'll have a lower rate. Right.
I think sometimes when that down payment assistance gets in there, that it is not always recognized that it does have to be paid back. Now, sometimes it doesn't have to be paid back until you sell.
Right.
But that gets into understanding your plan and your goals. Because if you're only holding the property for 3 to 5 years, for instance, and you do have a down payment assistance program attached to that is going to need to be paid when you sell, we need to look at that expense, right? And we need to make sure that we have enough equity built up that is something that can still happen and you can pay, closing costs, real estate compensation, all of those things, and not have to bring cash to closing. Now, sometimes people have to bring cash to closing.
In terms of the down payment assistance, it's not everything, right? It's the programs were never designed to literally cover it. Sometimes, easily saying it in for a very nominal. Most programs are going to require you have at least $1,000 invested. A little bit more difficult to do in our area, but not crazy much. But yeah, so what Chris is talking about is a lot of the down payment assistance programs. There's a silent second put on the home. So really the home has 2 liens. If you go to sell or you refinance, that second lien has to be addressed. This is just where it's our job to give you guys that information so that you can make an educated decision about if that's the right move for you.
Absolutely. Why don't you speak to the 2 primary differences on mortgage insurance?
So an FHA loan, you're going to actually have 2 different types of mortgage insurance. You're going to have a financed what we call upfront mortgage insurance. It's 1.75% that gets financed into the loan. And then you have a monthly mortgage insurance. With a conventional loan, again, less than 20% down, you are going to have mortgage insurance. I love to see the surprise on people's faces when they see how low that mortgage insurance actually is on a conventional loan. And the reason why is because there are some really big mortgage companies in this country who have basically beaten up and whittled down the mortgage insurance carrier. So the mortgage insurance companies are separate from the mortgage banks. And so these multi-billion-dollar companies have basically said, hey, if you want to do business with us, you're going to need to come way down on those premiums. And they did. And then the competition was like, hey, whoa. I want the same deal. Yay for English. Yeah, it's fun because you have people that maybe bought 10, 15 years ago and they've got in their mind, oh my goodness, this mortgage insurance is going to be crazy. and then they get in, the fee, and they're like, oh, that's completely manageable.
Yeah.
Let's say you wanted to put down 15% instead of 20. The mortgage insurance on it is very, very reasonable. I mean, we're talking like under $100. It's and there's a lot of people that would just rather, hold on to the cash. So
Yes. That's the other thing. And it's part of the discussion that you have when you're looking to structure your offer. But it's also what happens in tandem between your realtor and your lender when we look at can we get seller concessions? What is the best use of buyer's money?
Yeah.
And then what is going to bring them the biggest bang for their buck, not only in their mortgage program, but also just in their life. Lending is unique to each person. Let's talk about if you are trying to get into your first home. You are not married, but you have a significant other, a buddy, a cousin, or whatever, that you're going to buy a house together. Let's talk about that.
Let's say you are not married. Each of you have your own separate loan application with a separate credit pull.
Okay.
So even if you're engaged, it is a separate thing. Once you're married, we can do a joint application with a joint credit pull. Something kind of maybe to be mindful of and do some research on is if you are buying a house with somebody you are not married to, I cannot say enough about if anything changes in that relationship, how you have taken title to the home, how maybe assets, came into the home. So as an example, let's say one provided some significant money for the down payment and the other one didn't necessarily do that. If that relationship were to dissolve, are you expecting your money back? These are all good conversations to have. And I'm really surprised, honestly, over the years, and maybe you too, Chris, but how many times people really haven't had some of those frank conversations with their significant other or whoever they're basically purchasing a home with. And it's vitally important to have some of those conversations.
And sometimes really you need to seek an attorney
Yes.
To make sure that you've structured things, because unfortunately nothing wrecks a good relationship like money. Some of these deals can get very sticky, right? And then how do you untangle the web? It is critical that you have these conversations upfront, in depth. And I have sad stories of people that didn't, and things didn't work out well, and what it costs them on the backside to then now, because they have to seek legal advice. They have to hire an attorney to untangle the entanglement. And great opportunity exists, I think, for house hacking and duplexes and putting an ADU on your property potentially and having roommates. There's so many avenues to home ownership. You can get owner occupied multi-unit financing. Like there's in the finance world, right? Like there's just a never ending stream. You hear about the big ones, but there's so many beyond that that really could help your situation. So I think, again, you reach out to that trusted
Every borrower is a snowflake, essentially. I mean, your exact situation is not going to be the same as somebody else's. And so, when people ask me sort of blanket questions like, hey, Heidi, what are the rates? It's a little bit of a loaded question because there's so many data points that play into that individual's, particular situation that aren't applicable to, so many other people. So
you have a saying.
Yes.
The 2 Ps.
The 2 P.
Tell us about the 2 Ps and how it ties in to all the things that we've kind of been covering right now.
Yes. Preparation and positioning.
2 Ps in one pod. 2 Ps in a pod.
It's not always the sexy part of buying a piece of property, but I can tell you the people that really embrace the 2 Ps really tend to have the best outcomes in their purchase experience and also for long-term benefit to owning that property. So that positioning piece of it, it's hey, do we have the best situation in terms of your FICO score, your income, your assets, so that you can get the absolute best terms that we can absolutely give you for a mortgage loan. It could be, hey, do you need to meet with a tax attorney or tax preparer, your CPA? Do you need to meet with an attorney?
Right.
All of these things, so that we're basically trying to ferret out any problems or potential problems before they become a problem. We're trying to see around the blind corner, if you will, telling your loan officer everything that you can possibly think of. Maybe a debt that isn't showing up on your credit report, as an example. Maybe it could be, I'm, paying this bill every month. I'm paying a relative's rent, and that's not going to be showing up on a credit report, that kind of stuff. These sorts of things can really come back to bite you. So preparation, it encompasses a lot of different things. So preparation, I mean, that's all part of it, right? They go together. They're hand in hand. And
I think the big piece with preparation, though, is that we can't always see around the blind corner.
Right.
And so sometimes, especially if you are purchasing a home with, and even if you're married, right? Like, unfortunately, divorce happens. And so you just want to make sure that you are prepared for changes. Not all I love change, actually. I'm probably abnormal that way, but I do like to mix my stuff up. But when you go into a situation understanding that if something changes that is outside of our control, like you buy the house with your buddy is on one of those apps and meets true love on the other side of the ocean, and he's peace out and going to be with his love. Well, you got to sort out the house thing, and you don't want something like property to come between a good friendship. If you're in a relationship and it dissolves, the fewer obstacles, the better, right?
Yeah.
Like, the cleaner you can get out of a situation, the less painful at least that piece is, right? You still have other pieces, but at least this one thing is clean. Better to be prepared.
Be prepared. If you're buying a house with somebody, have those conversations about, hey, what do we want for a budget? What happens if, X, Y, and Z happens? It's just important to have some of those, conversations ahead of time.
Yeah, exactly. Yeah. All right. So if you've hung on to the bitter end of this saga, yay, I'm so excited and happy that you did. We want to leave you with a couple of pieces of encouragement.
Yeah.
First of all, hopefully you've discovered while listening to this that there isn't any scenario that you probably can't get into home ownership at some point.
Yes.
Maybe not today.
Right.
Next week. But, and if you are the proverbial tire kicker, right? And you're like, I just got to see if this is for me. I am a low commitment, low phone call returner sort of person. Like, I get you, but don't do that. Make the call, right? Like, don't let something as small as a phone call and a conversation with two people who couldn't be less pushy, if I do say so myself. Because if you aren't ready to do the thing, like, we're not going to force you. We don't want to work with you if you don't want to work with us. Trust me. So we will let you kick your tire and move on down the road. But sometimes once you pull back that first layer, which doesn't really tie into tire kicking, but it does when you're trying to explore, is that you find out that something is possible and it might really be for you. You just haven't let yourself had the dream because you weren't sure that it could ever come to fruition. I'm all for helping people make dreams come true.
100%.
100%.
Yeah, we are not high pressure people at all. A common thing that I see, people think, oh, if I talk to a loan officer, this somehow obligates me to move forward. I have to do something. I have to execute, And that is not the case at all. My number one job is to educate. If that goes away, I guess AI, will start doing everything. But it is my job to have that conversation with you and to help you explore what is possible. I just think of so many wonderful, fond memories of people who came to me and they didn't think it was possible to become a homeowner, and we found a way.
Made a way.
We made
a way. Homeowners, so happy that they kicked the tire, peeled back the onion,
whatever's the Band-Aid.
Yeah.
Make the telephone call.
Make the telephone.
It doesn't hurt. My goodness, in 15, 20 minutes, you'll have, more information than what you had yesterday. And so many times people come in with this fear and kind of, my husband says, brain cloud. And we want to make those brain clouds go away.
Absolutely. Absolutely. We are here to bring clarity.
Yes.
In a world that is full of a lot of bullshit, and sometimes it's hard to know the truth from the lies. We will do our absolute best to help sort that for you. So
Yeah.
I'm going to put Heidi's contact information in the link or the show notes. Like, I don't know what the verbiage is on YouTube, but we'll make sure it's there. If you are interested, you can certainly reach out to me as well, because I have Heidi on speed dial. I talk to her all the time, and I would be happy to share her information. If home ownership is something you would like to pursue, I would love, 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 and consider it an honor and a privilege to help you get there. So please make the call.
Side note. If you already own a home, and life is taking you in different directions and you're trying to figure out what your options are, make the call.
Oh, yeah.
Make the call. There could be a program that allows you to stay in your house. Maybe it's having a conversation about selling the house. How are you going to move from current house into a new house with the least amount of brain damage as possible? So many reasons to give us a call, but give us a call.
So many reasons. And Heidi touched on some important ones, because maybe you're not looking to buy. Maybe you're looking to sell or to move on or to leverage your equity. There's a lot of different things. And again, that phone call just says, hey, here's my situation. What do I do? And we can spitball ideas with you. Yeah. So what are you going to do?
Yeah. Rip off that Band-Aid, clean call.
Cool.
Yeah.
Thanks so much.